kind of probably a worst case scenario in terms of total revenues, especially if we look at, line by line, on the revenue side, we were down, in every single category and fairly significantly. But I think at the same time, when we look at, when we do our procedures, we really look at things from a number of different angles. And one thing, and we've talked about this before, is kind of how the overall reporting process fits into the system, whether it's adequate and how that's working. And I think that one of the things that we've seen, not just here, but everywhere, is that, especially on the budgetary control side of things, it's pretty easy to kind of be rolling along pretty smooth when you got plenty of money coming in. There's really, when you get to a year like last year, where you're kind of continually revising your revenue estimates downward, you really get a lot better feel of basically how the system's working. And I think that our conclusion was, in really every respect from the budgetary control standpoint, is really the city did a very good job, management and the financial reporting group did a very good job of kind of adjusting to that. And the result of that, you compare that to if we'd had this same situation, say 10 years ago, we would have had some, really some major struggles at going into this budget year and this fiscal year, because we would have really kind of been reactionary. A lot of the way the system, the reporting system was, in say 10 years ago, was really basically, it created some, some pretty decent numbers at the end of the year, but it really didn't give you a lot of information to really make, make the types of adjustments as the situation, arose. And, I don't think it was really that big of a surprise to anybody that we had, 4 or 5 years really of unbelievable years. And so, at some point, gravity has to take effect, and we've got to have those down years. I think the way that kind of played out, it was probably a little steeper and a little faster, and maybe the flip side of that is maybe a little shorter, on the downside than we would have normally anticipated. But I thought, from our perspective, the important thing of that was that the reporting system did a very good job of basically handling that from every standpoint, both from a budgetary standpoint, from the reporting standpoint, and just as importantly, as you go into the budget to approve for this year, you had good numbers to work with, and that's awfully important. One of the things that I always say that is a good indication of basically how the system is doing is how the reports that you guys get each month compares to the end auditor report. It doesn't do you a whole lot of good if our audit report is substantially different than your monthly reports. And so we had just a couple of very minor adjustments. They were classification, more than anything. And so I think that gives us a good indication that, from top to bottom, from the start of a purchase or receipt of a revenue all the way to basically how it gets to the audited financial statement, those systems are in place and really effective and working well. Over on page number 9 is the government-wide. We've had been fortunate enough for, I think, maybe except for 1 year since we've been doing the audit, to have a net surplus at the end of the year, government-wide, taking all activities. This year we weren't quite so lucky. If you look on page 9 over on the kind of bottom right-hand corner, we had a $555,000 deficit for the year. And this is the one, the government-wide is the one that's really kind of, you can really kind of relate to it, kind of a business-type financial statement. This is where we include depreciation, we include interest expense, but not debt service as expenditures. If you try to compare those to your individual funds, some of them look a lot worse, but they're really not. You got to remember that we were on the tail end of that park project, had already recognized most of our debt service, or debt, which is actually an income for funds, but we had most for expenditures. So we actually had over on the fund side of that, we had a $2 million deficit in general fund, and then a $3 million deficit in the sales tax fund. And so, so it was a little different, but that was really more of a timing thing as opposed to really how the city, city did. All in all, I really felt like that. Based on what we had developed for our expectations coming into the audit, both from the standpoint of performance, financial performance, but more importantly, kind of procedurally, we've gotten to a point that we're able to, when we first started doing the audit, we basically really couldn't rely on any procedures to speak of. And so most of our time was spent on really kind of what we call substantive testing, really kind of drilling down, pulling the invoices. That's particularly time consuming. The problem with that approach is that basically you can only select so many. And so there's a higher risk that basically you miss something with that approach. Over the years we've been able to develop more and more of a control testing type of approach. And the thing that's good with that is that basically lets us see a lot more of the bigger picture of the things. And the fact that we continue every single year to have fewer and fewer adjustments and see improvements in the system, I think speaks well for the city manager and Doug and his staff and really all the accounting personnel. We issued an unqualified opinion on the financial statements that they're fairly presented. There's also at the back, I think it'd be nearly the back page, page 51 is a report that's required under governmental audit standards that requires us to not have an opinion, but basically plan our audit to where we test for adequacy of the internal control structure and compliance with laws and regulations. And we found, no material things there that had to be reported on either one of those. I think the one thing that I probably kind of stuck out to me that I felt like probably this was a year that really made me feel like we were kind of where we needed to be. So we've had a lot of people moving around over, really in the last 5 years, and I really feel like that. And I'm not sure that we had any new people this year at all. I think this is the first full year that we basically had everybody doing that same task. There's really a nice mix and skill set of people right now, and so we really got the right people doing the right jobs, and that's one of the reasons why the system flows, relatively well and for the most part error-free. So other than that, I didn't have like I said, I could talk about about the numbers all night, but there's not that much to talk about. It just wasn't that good of a year, and things already look like they're on the upswing. So, but be glad to answer any questions anybody has.
How many years have you done audit?
I think this is the 7th year. I believe that would be, 2000, because it was the first year that we implemented GASB 34, and I think that would have been the year ending June 30th of 2003.
Daryl, you might touch just a little bit more in depth on that the guidelines that you have to follow change every year.
Every year, yeah.
So that the commission has a good understanding that you're not coming in every year and you have the same set of guidelines for the same criteria that you have to basically perform your audit under. I mean, those guidelines, they change, the requirements change.
Yeah, we've been in that 7-year period. The first major change in governmental accounting was the implementation of GASB 34, which happened about the first year that we did that. When the audits that are done today are not even comparable to those that were done 7 years ago. For one thing, the thing that's really different in the last 2 years is we've been what's called under what we call risk assessment standards, and those are important really and we've gotten to where we feel like that basically, besides the fact that there are a lot more work, we feel like there's probably some additional value in identifying areas based on that change in audit approach. But it was really kind a fundamental change in basically how we went about doing our things. That's really kind of a two-pronged thing. For one thing, the management of the city is responsible for their own risk assessment, and design of their system. And so we have to first of all evaluate whether or not they do a good job on that. And we've always been really fortunate that that we were probably ahead of the curve in terms of how management adjusts to risk and identifies risk. Then on our side of it, we basically look and what used to happen, really, the easiest way to think about it is if every transaction that the city had was a gumball in a big bucket, then basically, regardless of which department that impacted, how much it was, anything else, under the old way of doing things, basically we stuck our hand in the deal, drew something out, and that's what got tested. Completely different today in that basically we assess by department, by types of transactions, by dollar amount, by a number of different things, where the highest risk areas are, and basically almost all, I'd say 90% of our testing is done on what we have considered a moderate or higher risk. And so, and that's where we feel like, now that was a little bit of a challenge to implement. It's been a little easier here for a couple reasons. Number one is the encode system that you guys use for an accounting has been one of the easier ones to where we can really drill down in a number of levels and really kind of do some data analysis and kind of see what, we get a lot better feel for what that risk assessment should be. But once we identify those high risk areas, then we look at, instead of the actual transactions, we're looking more and more at basically, what procedures are in place? Are the people following the procedures? How could that procedure, we have to look at it, it kind of goes against my nature because I have to assume that most people are good, even though a bunch have proven otherwise over the years. But we have to assume, we have to take a particular type of transaction and really kind of say, okay, if you were the most devious, dishonest, bad person there was, how's all the ways that you could basically get around this procedure? And when you go through that process, and it does a couple things. Number one is these guys are ready for us because they know we're going to ask questions off the wall. On basically that they better be. They can't just make things up on the go because we're going to figure it out that that they really don't have procedures. But even more important than that is really we get to do a lot of observation of whether or not those procedures. It's fine to basically create a beautiful accounting manual that says you ought to do this and this and this and this. But if people aren't following that, it is absolutely no value. And so we spend a lot of time. And like I said, one of the things, I think part of that was kind of getting the right people in the right place. But the other thing is I think we've got, from top to bottom, we've got a lot of people that basically are very conscientious about their job. And we ask them, typically what happens if, and we look at a particular procedure, I'll ask Alan or I'll ask Anita, how's this supposed to happen? And they tell me, of course, they give me management's answer. And so then through a series of things, usually by going and asking the person who's actually responsible for that and also observing kind of things that happen on records that we can see, we test to see if management's really, being honest with us, if that procedure is actually in place.